Our first presentation for the afternoon, she's the head of the Americas Property and Casualty at Celent. And Carlin Carnahan, please join the stage.
Thanks, Hi, guys. I am so lucky to have this coveted spot of right after lunch in a very dark room. Like, I know everybody else was hoping to get it, and I won out. I'm sorry, these lights are like super bright right in your eyes, so my apologies if it looks like I'm squinting. I do head up the property casualty business for the Americas, North America, Latin America, for Celent. For those of you who don't know us, we're an analyst firm. We do research and consulting on technology in the financial services space. And so this is kind of fun for us because we get to spend our time looking at what is happening in the business, whether it's the insurtechs, whether it's the insurance companies, whether it's the other vendors or the service providers, and saying, what does this all mean? Where is it all going? And I was asked to come today to talk about customer experience and some of the things that are happening. And when you look at what's happening in the industry, one of the very interesting questions that I think that people have to ask is, what actually is an insurance company? Right? You can outsource all of your underwriting. Right? QBE just did that. They outsourced all of their commercial lines underwriting for accounts under 100,000. You can outsource all of your claims. I mean, Sedgwick will probably be even cheaper than your own people. You can outsource billing and payments. You don't even have to put up money, right? Because the reinsurers, the venture capitalists, other people will put up the capital for you. So if everything in insurance is virtual, what is an insurance company? And I'm beginning to think that it falls into two categories. The first one is data and analytics. And having the right data to make the right kinds of decisions, to have the right data to identify the appropriate customers, to treat the customers effectively and appropriately, because I think that where you really win as an insurance company is in the customer experience. That's the transformative area, that's the disruptive area. But it is much more than just technology, right? There's this huge cultural aspect to insurance companies around changing this customer experience. I mean, one of the very first questions you have to ask in the insurance industry is, who is the customer? And I'll tell you, it's a matter of religion for property casualty anyway. About 30% of carriers, and I just did this survey earlier this year, about 30% of the carriers say that the agent is the customer. How many of you here believe that the agent is the customer? Yeah, a number of folks. Because especially in commercial lines, the agent has so much influence over the placement of the business that you have to treat them very special. Agents are very clear. They place business where it's easy. About 30% of respondents say, no, the policyholder is a customer. They're the ones who pay us the money. And about 30% say, they're both customers that have to be addressed. So when you think about customer experience, it's more than just putting up technology. It's thinking through the issue of who is the customer, what is the customer journey, and why does this all matter, right? Now, why is this even a topic right now? And this is nothing new to anybody in this world, in this room, but I'll tell you, when I talk to insurance carriers, they're sometimes sort of stunned when they start to really think about just how rapidly our society has become digital. I was telling somebody earlier today that when I first started in the career, more than 10 years ago, just saying, our company got the first personal computer, our very first PC. It had its own cubicle, but we didn't know what to do with it, right? Just sat there. And you look at how quickly things have changed and how the expectations of our consumers have changed as well. We've moved from basic search to transactions online, to interacting online, to this collaborative sharing economy, and now to the Internet of Things. And the expectations of our customers are evolving as well. And along with that trajectory in that world, you have to look at this explosion of new technologies, whether it's these physical technologies like the Internet of Things or wearables, or whether it's the virtual technologies, artificial intelligence and gamification. All of these tools create new ways that we can interact and engage with our customers. And by the way, they also create new exposures that we have to be thinking about because as insurance companies, we're going to end up bearing some of that risk one way or another. But if you look at, I love this quote from Elon Musk, if you go back a few hundred years, what we take for granted today would seem like magic, right? The ability to talk to people, you know, the ability to get from California to New York in 5 hours, having the entire knowledge of the human race on a cell phone, right, available through a cell phone, it's like magic. And you think, given that trajectory of where we've been and how quickly we have moved, where are we going next, right? So this is one of the major trends when you start to think about customer experience is how do I utilize some of these technologies? Now, along with it, you have to be very clear that customer expectations are changing as well, especially because of things that are happening in other categories, right? I expect instant information. I can tell where my Uber car is as it's turning the corner. Why can't I tell if my claim check has been issued? Right? Some fairly basic stuff that customers are expecting. Ubiquitous access across channels. If I've gone online and I've done my chat bot and I've tried to get information and I still need help, how come I have to call the call center, explain who I am all over again, explain my question all over again? Why can't I just get help? Personalized service. We had a few folks here who were talking about advice engines, and this is something that I've been writing about because I think that the reason that you don't have as much conversion online from some of these online brokers is you're providing kind of terrible advice, right? And until you get good advice, you can't be confident in making a decision. So I expect that you know who I am. I expect that you're going to anticipate my needs and that you're going to present me advice that is good advice. Consumers today expect control over the process. Don't just do things behind my back. I want to participate in it. I want transparency. And it makes a huge difference. So I was talking with an insurance company, about 2 years ago. I was speaking at the PCI executive conference. I don't know who this guy was. There was a room full of CEOs of insurance companies. And I was talking about gamification. And I said, are any of you guys using this? And one guy raised his hand. He said, yeah, we have this really cool thing. And like I said, I don't know who it is. He said, we have a treasure chest up in the corner in our online auto application. As people answer questions, do you own your own home? Yes. Ka-ching, ka-ching, coins fill up. Have you ever had an accident? No. Ka-ching, ka-ching, coins fill up. Now, the coins were just a visual depiction of the filed discounts in the algorithm, right? And at the end of the process, the consumer got the full, hugely, ridiculously expensive, undiscounted quote, and then could spend their coins. And they had a choice. They could simply apply it to the price the way that it normally would have been. They could buy a lower deductible. They could buy higher limits. They could add additional coverages. Well, this CEO said two very interesting things happened when they applied this new treasure chest. He said, first of all, online conversion went up by about 35%. And second of all, people were not buying down the premium. They were buying lower deductibles and higher limits. So this transparency and this idea that people want to be involved and they want the information for decision support, they want to be involved in this, is a huge change in the expectations of customers. Now, competitors, not just insurance companies, are starting to see these kinds of trends as saying, hey, we can do better than insurance companies and we can take away that business. Trend number one, customer centricity. More empowered consumers, people who want to be involved and who have that power and who are more educated, more financially literate about the kinds of things that they're buying. Data and analytics. There are a number of you guys out here who have companies focused on better data, better analytics, being applied in new ways, making better decisions, whether it's underwriting or claims or customer acquisition. And lastly, this mobility and social, this idea that let's talk together and let's be where you need to be when you need us to be there. So there are folks who are working to take this away from insurance companies. And you know what? That is not a hard thing to do. Because insurance companies are not positioned very well. This comes from a survey that our parent company, Oliver Wyman, did of the top 20 U.S. insurance companies, saying, how well are you doing this? So let's look at some of these things. Single view of the customer. Yeah, that's kind of terrible, huh? So it's hard to anticipate a customer's needs. It's hard to give them good advice if you don't even know all of the policies that they have in production with you. Social media. Yeah, can you talk to your customers in the way that they want to talk to you? Yeah, that's a pretty low number. Digital marketing. Yeah, not so good there. How about service and sales automation? A little bit better there. And the reason that carriers tend to be a little bit better there is because there's a cost advantage to automation, right? It's not necessarily because they're trying to digitally create an amazing customer experience. It's around, we can automate some of the services in order to reduce costs. Analytics still fairly nascent in this business. The human capital, the omni-channel support, and even the visual experience and content. Insurance companies are pretty well aware that they have a long ways to go before they're satisfied here. Now, going digital is one of the hottest topics in the insurance industry, right? You read about it in all the media. We write about it all the time. We have a whole theme around going digital. We do a lot of consulting for people around how to go digital. And digital can be the back end, streamlining things so that you have automated and created a better experience while reducing your costs, or it can be the front end. And in the insurance industry, much of the work that is going on, and much of the work from those of you in this room, are really set up around the brand and the marketing needs. Let's create a seamless omni-channel, let's do mobile-first design. Insurers are pushing back-end process automation to cut costs. When it comes to analytics, we're pretty nascent compared to the rest of financial services. Most of the analytics that insurance companies do are around risk assessment, trying to do a better job of understanding the level of risk, the quality of the account, and then applying the appropriate price to that account. Analytics are often used pretty heavily on the claims side as well, right? Let's see if we can predict which claim's going to go wonky as fast as possible so that we can intervene and try and keep it from growing its wonkiness. The analytics that are being done on the marketing side are more typically being done around producers than they are around policyholders. And this gets back to that initial question of who is the customer. And so a lot of analytics go into place to try and determine the segmentation of the brokers and to try and figure out who we should be appointing. Not as many around the end customer and why people buy and what the next most likely product is. Insurance companies in general don't have a lot of knowledge and skills in the whole world of digital. This is starting to change, though. I mean, the challenge has been that the insurance industry has just not been the sexy place for kids coming out of college. If you have a choice of go working on the Halo system or coming to work for a big insurance company with a bunch of COBOL, that's probably not going to get those folks. But the insurance industry today is rapidly changing, right? Where else can you go and work on Internet of Things and do data lakes and look at wearables, and there's so much happening that this is an industry that is starting to attract some new talent. And the single view of the customer, very common goal, really hard to do. Our data tends to still be in individual applications, right? It's hard to get a view of a customer across the applications. In fact, nobody really owns this. Very interesting new position that we are starting to see at insurance companies, which is a Chief Customer Experience Officer, which I find quite interesting, right? Because customer experience until now has been owned in the silos. Underwriting owned the underwriting process, and claims owned the claims process, and finance owned the billing process, and you assume that it all works, right? But we're starting to see folks saying, no, customer experience is the new battleground, and we have to have somebody who's looking at it across the entire spectrum. And let me just say, customer experience is not necessarily just focused on the end policyholder, because those carriers who see the broker as the customer are actively looking at the customer experience for the agents. Now, because insurance carriers have these gaps, there's a lot of new players out there that are looking to squeeze the brokers out, and the traditional insurance independent agents are looking to squeeze the insurers out. This is just a few of the, 800 or so folks in this space. And so you look at the traditional channels, and I have to say, I used to be the head of marketing for a $2 billion insurance company. And some of these things in the traditional, we thought were alternative, right? So you can see how far the world has come, right? From these traditional channels to the aggregators, those folks who generate leads and then sell the leads, to the digital agents who will actually place business and make commissions, to the digital MGAs who will process the business using someone else's capital. More and more carriers going direct. Two more that, just in the last couple of weeks, Pie and Cake, both going direct to consumer for workers' comp. And we're looking at this new channel as well of partnerships. This is interesting. Insurance companies are starting to realize I've spent a lot of money to bring these leads in, and if I simply decline them, all I've done is lost money. But if I can partner with somebody else who is interested and I can get paid for that, then I can monetize that rather than simply spending money. And so you see folks like Patriot, a workers' comp carrier, partnering with Travelers for the small business. You see folks like Allstate, who doesn't really want to write homeowners in Florida, but UPC does, or Pacific Specialty, handling their homeowners in California. So these partnerships with other insurance companies, either to take the business that doesn't fit your risk appetite or to add additional coverage where you don't have the skills. Complementary channels, a relatively new area, which is let's sell insurance through non-insurance places. In Asia, when you buy a Tesla, you buy your auto insurance with the car. It comes with the Tesla. Like, that kind of makes sense, right? Buy a car insurance, why not? And one of the other areas that I find quite interesting are these platforms. And what they're saying is our goal is to connect and simplify the process of the insurance agents working with the insurance carriers. And so for many carriers whose primary distribution channel is the independent agent and who are saying, how do I go direct? How do I take advantage of this growing direct market? There are a lot of opportunities here, right? Insurance companies can certainly work with aggregators or digital agencies and not disrupt the independent agency channel. They can support the platforms. They can work with Bold Penguin. They can work with Applied, putting their appetite onto the Ivans market. Right? There are a lot of places where even those carriers that work with independent agents can take advantage of these newer technologies and new ways of looking at distributing insurance. Now, to be successful, though, when you talk about customer experience, it's easy to think of it as the UI, right? We're going to have a really slick UI, and it's going to be on a mobile phone, and we're going to swipe, and it'll be cool colors. Like, I really like pink or purple, and we'll call it food, right? Some kind of food, lemonade or cake or pie or cookies or champagne, I don't know. But when you think about what customer experience really is, it's around the customer's view of value. And their value is a combination. It's this value equation. It's the benefits that you think you're going to get from the product itself, and it's the benefits, the emotional benefits you get from working, from buying that particular product. Those are the things that raise value. And the things that drop value is how much work is it? Is it a hassle? Is there a hassle factor? Because that drops value right away. And how much do I think it costs compared to what I thought it would cost? And this expectation thing is pretty important. You look at someone like Lemonade. I'm sure everybody knows Lemonade. They have built a lot of behavioral economics into their online application. And one of the things that they have done is I think they're very clever. You put in your information, and at one point in the application, it pulls up certain criteria, like the crime rate in your neighborhood or the construction, and it has a number of stars. And so it'll rate you 3 stars or 2 stars or 4 stars. So it initially sets your expectation, I'm not perfect, right? And then when they show you your price, they show it to you on a monthly basis. And so now it looks really tiny. And so you think, oh, this is really great because I thought it was going to be really high because I'm not perfect. And instead it comes out looking much lower. So they've satisfied the price, not necessarily by actually having a low price, but by managing the expectations. So when you think about this then, there's a couple of dimensions to think about, right? There's the how do you reduce the customer effort, right? Can I make it simple and usable? Can I make it easily accessible across multiple different channels or platforms? Can I be proactive about providing them advice, providing them guidance? I can create the actual benefits from the product, right? So I can have a better solution with better services. So we're seeing products today where the services are embedded within the product, right? We don't just give you money. We will actually help you recover after the loss. Or we'll give you a service like Allstate including the Nest in their homeowners product, or John Hancock including the Fitbit as part of the Vitality program. You can create benefits because you have a better performance or quality. We're amazing at handling claims. Right? And you can create benefits by being very flexible. We recognize where you don't fit in the box, and we can still handle that. Our homeowners product will cover your 150-year-old leaded windows in your historical house. Right? We can be flexible. And down on the emotional side, the dimensions include things like fairness, right, and consistency. It's not fair that I paid you for 15 years and I had one small claim and you tripled my premium. That doesn't feel fair. Right? Transparency. Letting me see all of the different components, and of course, this personal appreciation. Know who I am, appreciate that I'm your customer. So these are some of the dimensions when it comes to customer service. Now, as you move down the customer service path, there are a few stages that carriers, brokers, anybody dealing with the customer should think about. The first one is get the basics right, right? You don't have to be super fancy, but at least get the basics right, right? Try and just make sure that the customer frustrations are low, focus on eliminating hassles and pain points. And this is where we see a lot of carriers focusing their customer journey work. Right? Let me optimize buying, let me optimize payments, let me look at the claims processing. So you've got to do some of this initially. Focus on reducing their effort, focus on the product. Stage 2, create the smart, emotional wows, right? Find the opportunities to wow the customers. And there's lots of ways that people can do this. And a lot of it is simply by that anticipation of your needs. The information that is being provided. You know, somebody said the text message, hey, the hailstorm is coming, move your car indoors. Although a lot of my clients have said, I would never send that to my customers. They would all go park it out on the street. And stage 3, individualize the experience. Make it personal to me. Understand my needs. If I call you to cancel my homeowner's product, react differently to me if I'm canceling because I've been promoted and I'm buying a new house. Or I'm having a baby, so I'm moving to a new school district. Or I've retired, so I'm downsizing. Or I've gone broke and I'm moving into mom's basement, right? React to me differently. Understand who I am. Understand the preferences. Understand what my needs are and give me the power to choose. And this kind of thing may require reinvention of the business model. We think of the customer experience as optimizing the interactions between the customer and the insurance company or the broker in those standard insurance pieces, right? How do I make it good to buy the policy, to pay my bill, to handle a claim? But the opportunity arises when you think about it being even bigger. FIGO. FIGO is a pet insurance company. I don't know, is anybody from FIGO here? No, well, pet insurance is a minor specialty line, but FIGO has done something I think is quite interesting. They've created a company for pet owners. You can post the pictures of your dogs and find the doggy parks and find people to go play dog stuff with and I don't own a dog, okay? But you get it. And you can also manage all of your doggy health insurance. So it's really saying we're not just about the insurance, we're about where insurance fits in your overall life. Allstate. Allstate has a target market of motorcycle riders. You can download an application that lets you plot a ride, find other people to ride with, check the weather, find the gas stations. There's a gamification element. 500 miles on my bike, I'm a road warrior. And by the way, I can talk to my agent and pull up my proof of insurance and submit a claim and do all of the insurance stuff. So this customer experience, this individualization, is about not just getting the basics right of managing a claim and paying your bill, but looking for other ways that we are part of the overall insurance experience. So like it or not, the world is changing, and very, very rapidly. The technology is changing, the experiences are changing, and there's a ton of folks out here, you insurtech companies. It's like you've taken this Rubik's Cube of insurance, and you've broken it apart, and you've thrown it up in the air, and you've created a snowflake, right? Something totally different. And so we have to be thinking, as an industry, where this is all going. The expectations are changing, digital is revolutionizing, a lot of opportunities because insurance carriers themselves have a hard time moving quickly. There's a lot of investment going on here, but there's still a ton of opportunity. And this, in my mind, is the area that we can all in the industry make a tremendous improvement. Now with that, that's the end of my session. Thank you.
Thank you, Carlin, and I'm excited to hear the panel dive deeper into customer experience, bringing value to customers, and looking through the customer journey, especially around customization using data to be more specific about what you offer. So welcome back, Dick Cagney, General Manager at KBW, our moderator for the panel. I'd like to welcome John Helbstadt from Capital Insurance Group, Chief Innovation Officer over there, and VP, and also Donna Peoples, Chief Customer Officer at Pipestream.
Hey, nice to meet you in person.
Thanks. Nice to meet you. Okay, I'm really not sure that we can add any value after their presentation.
Yeah,
That was
how many
tremendous. I mean, there were a lot of
later?
great insights into that. Very brief introductions. Well, I think actually, as Liz did, Donna actually, prior to joining Pipestream, Donna was also the CCO of AIG, so I think has a lot of solid experience in the insurance business. And it's nice to have John here because it's nice to have an underwriter up on the podium. So I've got some interesting questions that I want to get into with you. But if I might go back for a second, I really find it interesting to talk about the fact that one of the things you mentioned was, I'm going to go sit over here, was the possibility of business model redos. Obviously, you've got the experience with the pets and the motorcycles with Allstate, but aren't those by and large relatively new product offerings that really maybe they didn't need to be created, if you will? And so how do a lot of these companies start to think about business model redos? Because I think there's probably a lot of truth to that in many respects.
I think you have to really know your customers, and you have to think about where you fit in their real life. It's very easy for us to get very insular and think that it's all about insurance, and it's not. I'm sorry, it's not. So if you are a company that sells or writes homeowners insurance, what if you redefined yourself as a company for homeowners, which includes insurance, but might include things like real estate sales or construction or contracting or maintenance schedules or redecorating or all those things that go along with being a home. It's easy to think about this when it comes to personal lines, but think about it for commercial lines as well. Suppose you focus on restaurants. What are restaurateurs interested in? Well, they're probably interested in things like food safety and cutting costs on food and new menus and how do you handle temporary workers and staff and can they talk to other people? And so why not set up a community where restaurateurs can talk to each other or where they can get advice from your loss control engineers or they can get discounts on products? I mean, there's things that you can do if you define yourself differently, right? It's like, we've defined ourselves as buggy whips and we need to think of ourselves as transportation.
John, you've got a technology background at an insurance company. Talk about that and what you've found since you've been with the insurance company, and talk about your experience here. And I have other questions, and then I have some questions of you as well.
Sure. So I'm relatively new to the, at least P&C insurance industry. So I've been with Capital Insurance Group for about 2 years. So it's been interesting for me, and I think sort of the theme, we've used different terms, and not just in this session, but before, is that the bar really is low. So one of the benefits of being in this industry from my perspective is it makes me feel like I'm smarter than I actually am because the stuff we're talking about is stuff that a lot of people were doing 10 or 20 years ago, whether it's data or building a compelling user experience or understanding who your customers are, whatever those cases may be. But I would agree to a large degree. There was a comment that was made in the earlier session, which is, I think, a better term than I came up with myself, which was the grudge purchase, I believe was your reference earlier. And I think, from my perspective, what you were just saying really resonates with me. We're dealing with a product that people either pay for and don't use, which is not going to be a great experience, or they pay for and think of the circumstances in which they need to use them. The car that I love just crashed. It's great that it's covered, but all I'm thinking about is that thing that I loved just got destroyed. House, car, business, whatever the case may be. So when I'm envisioning from a customer experience perspective what that should be, insurance is a very challenging and compelling industry and domain to have a great customer experience, right? I mean, I'm paying for something I don't use, that sucks. I'm paying for something I do use, that sucks more, right? I don't know where you end up positive on that. But from my perspective, what you were saying really did resonate because if we change, I don't know about reinventing the business model. From my perspective, there's a lot that we can do to articulate better what the value is in ways that are more resonant. We've just, as an industry, again, coming in from the outside, so apologies if I offend anybody who I haven't already, my perspective is that we've just been lazy for a long time. We've got a lot of folks that are just automatically renewing their business and they expect to pay it like they expect to pay taxes. They have to do it. They don't like doing it. It's that grudge purchase. However, we can move out of that to really say, here's what you're really getting. The president of our company had referred to it as being in the life restoral business. And when you think of it in those terms, those things can resonate. And anything that's on the periphery of that in that ecosystem, I think if I say big data and agile, like I hit all the buzzwords and somebody can close their card out. But at that point, in that ecosystem, we're really talking about things that do provide value, that people do care about, and then there is an understanding of I'm paying this and I'm getting something for it that makes sense, and anything on the periphery of that that helps cement that relationship, I think makes an awful lot of sense. So I answered a couple questions you didn't ask. I don't know if I've answered.
I'm going to come back because I do want to talk about your experience, and I don't know how much you feel comfortable talking about it, but I do want to come back, not yet, to your experience at the company in terms of working through an existing insurance company with your ideas and technology and how it's been received or not received. So you can think about it if you want to answer that.
Absolutely. I will. I probably shouldn't, but I will.
Okay. All right. Donna, secure messaging platform. Explain that.
Well, probably like many of you in insurance or any highly regulated environment, we struggle with how do you more deeply engage with your end users, whether they're policyholders or brokers or regulators or pick the stakeholder group, and still meet the compliance for regulation, for data privacy and security. And in my opinion and my experience, everything was way too socially architected and exposed my data. So I had literally searched the world over to try to find a way that I could accomplish this. And until very recently, in fact, about 2.5 years ago, I hadn't seen anything that existed that could meet all of those requirements. The other thing is, you think about how the world has changed, and I love the presentation. I mean, the variety, the velocity, the volume of change is only going to increase, and just keeping up is table stakes. I mean, how many of you used to do 5-year planning? I mean, I don't even know what that looks like now. So, how do you stay ahead of the curve on all those things that have to be considered and provide real functionality in this on-demand economy that we all find ourselves trying to live in? Has anybody ever heard the term FANG? Okay, well, I'm going to teach you something. It's Facebook, Amazon, Netflix, and Google. And those companies have redefined the space. We used to feel like we could crawl into the relative safety of our verticals and think about our competitors and who we thought they were. But now, I got to tell you, we live on this horizontal, and we're getting compared to some of the service delivery giants. So all those things in play, but still meeting the regulatory compliance and protecting our data, I think we're going to continue to struggle with a little bit.
Good luck.
Yeah.
Talk about your experience at AIG as it relates to this conversation, if it's applicable.
No, absolutely. And some of the things that you were saying, I mean, I feel like I was having this flashback because, some of the low-hanging fruit was in this federated model that a lot of enterprises have. And it's a lack of elegance in handoffs that happen, because here's a newsflash. The customer doesn't care what department or function they're talking to. You're one company to them all the time, and treating them like that. And I loved putting the customer in the mix. I'd go out and I'd say, well, have you done customer journey mapping? Yes, yes. Well, tell me how you did it. What was your approach? Well, we got in a room and we mapped out the customer's journey. I said, well, was the customer involved in that conversation? Because it sounds like you just did a work club. Well, yeah, well, we're experts after all. They don't know what they need. And so, those were the kind of things that were turning around at the time. And it was fascinating because I got the amazing opportunity to be part of the company when it paid back the tort money, which we did all the right things. We focused internally. And we committed ourselves to improving ourselves and to paying back the tort money with interest, for the record, thanks to Bob Benmosche and the leadership team. But what that also did was create some behaviors that we had almost lost as part of the vocabulary, the customer. So, how do you bring that back? And I love that you talked about a culture shift, because navigating those politics of change in an organization of scale is one of the really difficult things to do as well.
Okay, let's go. That's a great lead into you. Culture change, navigating any changes, technological changes that
Sure.
for 2 years, and how was your management? How did they view you coming on board? And
They're very patient.
what were their goals for what they wanted you to accomplish?
Well, without going into details that may not be overly interesting to everybody, maybe not even me, when I came in, we had a couple of, and this is, I think, no surprise to anybody who's in the industry, a couple of large-scale implementations of new, core systems that were delayed, problematic, extraordinarily expensive. I'm sure that's news to everybody. You're nodding as if you've never heard of such a thing. Right, and not unique to our industry, but for some reason I came in, and this wasn't my background, everything was, when we talked to our integrator, everything was 18 months. For some reason in the insurance industry, it's just long enough to get a new CIO, I guess, and whatever decisions you make, it reset. But that wasn't really my background, so I was very fortunate. I came in when the bar was really low, which is always helpful. If you can do that, I recommend it highly. But also, I had a very supportive executive team. I had some things from a playbook that I've used before that aren't really unique. They're not, my background has been very much an agile-based approach. So we have a different approach to how we develop and deliver software, and that was new, and rolling that out and getting more business engagement and understanding. We talk about customer journeys, really actually sitting down and meeting with our customers. I think in the initial questions that we got, there was that sort of, I think the intentionally false choice to see if we could get anybody in a fight about who's the customer, if it's the, if it's the agent or if it's the insured, and so my thing was, well, they both are, but also we have a ton of internal customers. We've got underwriters, and we've got customer service folks, and we've got, so, yeah, well, try to not think about them, but we do. But anyway, so understanding all those constituencies and working with them was new, but we were very much supported, especially at the executive level, which was, I think, rare in a lot of cases. And they were very understanding of everything that I and we wanted to do. I've got actually, a bunch of the folks that are part of our team actually joined here. You want to represent? Thank you. But that's really...
They look awfully young, by the way.
They do. Yeah, we like to get them young before they have bad habits. But that really is part of the thing that we move towards an FTE-based model more than getting folks who are in the hundreds of dollars per hour. That adds up really quickly. So the executive support and understanding of some key changes as to how we would build and develop things really made all of the difference. Also, articulating these things as these are programs, not projects. So there are projects within programs, but understanding traditional, well, not traditional, but I think newer and more appropriate ways of managing programs, portfolios of programs and projects, and understanding that, that we move these things based on business priority and how they impact the bottom line in more thoughtful ways, and looking at the entire portfolio rather than thinking we're going to have some big win, we're going to roll out some new system, and suddenly magic happens. All of those sorts of things, support at that level was essential.
But can I say, I want to interject, follow up on this, because you are very similar to a lot of insurance companies who have spent years and years and years replacing the core systems. And you have to look at this trajectory for insurance companies. The old COBOL-based systems, which were state-of-the-art back in the 60s. We were so the leaders when it comes to technology back in the 60s, right? They were very good at processing transactions, and they're very good at counting money. The newer systems, the modern systems that you're in the middle of implementing, are very, very good at optimizing the workflow inside an insurance company. They are not good at delivering a customer experience. To deliver a customer experience requires a lot of other kinds of capabilities, whether it's artificial intelligence or video communications or the Internet of Things or chatbots or working with distribution channels or mitigation devices. There's all these other things that have to talk to the core systems. Now, if you're an insurance company and you've just spent 4 years implementing your core system and you think you're finally done, and you suddenly now have to put together an ecosystem of all of these other providers, all of you insurtech startups are going to have to plug into these core systems. And an insurance company, you're going to have a full-time staff if you have to choose each one of those individually and plug them in individually and manage and maintain those relationships of that entire ecosystem. So this movement to customer service, using all of these cool things that you guys are thinking of, is going to be extraordinarily difficult for an insurance company.
Yeah, well, and I think for us, certainly, picking individual, modular components doesn't scale extraordinarily well. But there are still a bunch of opportunities. You know, we're here as much to listen to the folks who are pitching as much as we are to talk. But we struggle. You know, we have, as we talk about customer journey, you know, the idea is it's behavioral economics for us as well. We want to make it as easy as possible. The idea of you're going to get a quote for a BOP policy, that data is out there, whether it's CoreLogic or somebody in this room or someone else is pulling in this data. The less that folks have to, even if they've got it in their system of record in the AMS, wherever that data can be pulled, whatever we can do to make that easier from a technology perspective, if we can deal with a smaller number of folks who have nailed that problem, at the end of the day, we are just trying to make that as easy as possible, and that's how we'll win. If you can do a BOP with, you know, entering one or two, you know, pieces of information, hitting a button, and then we've got tons of services and connections to APIs, but we don't have to actually have relationships with 20 different providers, that actually will very much help us win.
Yeah, that shift to a microservices kind of an architecture, which is something everybody in the room should be thinking about. How do you enable that so that an insurance company can scale as they begin to use these new capabilities?
Donna, any thoughts on all this conversation here?
No, actually, it's fascinating because it's what we're already doing. And I will tell you, the availability of APIs is a huge differentiator. You know, it makes no sense for most enterprises to go rip out the legacy systems and replace it with new systems, not only from a capital perspective, but depreciation will bite you in the butt too pretty quickly. So we have literally done integrations into systems that still have a green screen in this industry, for those of you who are around to remember. But what it's done too is it's breathed new life into those old systems where the data lives, and then the magic of automation, by any other word, chatbots, to push and pull that data around to get to resolution. Because here's something else I'll tell you. Your customers don't always expect to be delighted. They expect to get solutions. And so designing for as close to 100% resolution on the front end, because, you know, trying to automate broken processes just pisses more customers off more quickly than you ever did before. So I don't recommend that. But
Okay. All right. Any questions in the audience at all? I want to make sure you're all awake out there. So the first person with a question gets a gift. Oh.
It's always tough to go right after lunch.
No? Okay. Oh,
I do have a question for you.
you have one.
So,
Go ahead.
Traditionally, the marketing group has owned the customer internally. Is that a fair statement?
No.
Okay.
When you say the marketing group, can you be
Well,
specific?
meaning that you have, you know, externally we all talk about who owns the customer, right? There's all that kind of conversation. So when you bring that conversation internal to the organization, someone has responsibility for that customer. And what I have seen is that you have, as more and more data is coming into the organization and people are trying to manage that data, that you have conversations that didn't occur before between the CIO and, let's say, the marketing team, and trying to sort through that and trying to figure that out. So, I mean, how have you seen that in your organizations, and how has that worked?
Well, I'll tell you, I can't agree that marketing has traditionally owned the customer, because what I have seen is that underwriting owns the new business and the underwriting process, and finance owns the billing side of it, so they own the customer there, and the claims people definitely own claims. There's nobody mucking around what they do. Now, the marketing has owned the customer. If you consider the customer to be the agent, then they have owned that. But if you look at the customer as the policyholder, it has been extremely siloed. So we've seen this new position, customer experience officer, and I'm seeing people do it very differently. Some people are treading very lightly. They're saying, we're going to start with things like net promoter scores and pulling in data to get a view of the customer. We're not changing your processes. And other people are saying, no, I'm sorry, we're changing the way that you're doing claims. We're changing the way that you are communicating with the customers in terms of the billing. We're actually going to intervene there. And this is part of what creates this cultural, challenge, right? Because if you're the chief underwriting officer, you don't expect that a chief customer experience person is going to change the way you underwrite. And yet, we're starting to see some of that happening. So who owns the customer? It's still, I think, from my experience, is quite siloed in the insurance industry.
well, and in my experience, it's been based on the numbers. everybody owns the customer or nobody owns the customer, depending on, how the numbers look. The problem, speaking from experience again, with having somebody who is overarching the entire enterprise, which is, wouldn't that be nirvana? But I think silos are the organizational cockroaches who are going to outlive us all. It always amuses me when people talk about busting down silos and things. So I think, to have that person given a seat at the senior table and making sure that there is this overarching understanding and alignment of goals, because unfortunately, a lot of times that role doesn't have authority over the areas that some of the change needs to manifest. So, will that change, or will, the word on the street is chief customer officers maybe have the life expectancy of a goldfish. I don't know. But we'll have to wait to see.
Hopefully longer.
Well, and I was going to make a joke, too, because...
that happens a lot in my general direction.
Wait, how long is his life expectancy?
I saw a cartoon the other day that said CIO stands for career is over.
Oh,
have you seen that?
No.
It's a tough panel.
On that note, any other questions?
Maybe I can move into that chief customer role now.
Anybody else out there? No? Okay. So is it more important to focus on the front end or the back end in terms of digitization? Like the front end customer experience, or deal with the claims and get that straightened out? If you're going to take a dollar and do one or the other.
Is that for me?
That's whoever wants to answer it.
Yeah, that was one of the ones that I thought was sort of the false dichotomy. I don't think that we, and it may vary by folks, our organization is structured by program team. So we don't have the luxury. We try to focus on each program of doing the most important thing at that given point in time. But the idea of choosing one over the other just really doesn't work. I think, ecosystem is the term that comes to mind to me. Having a solid front end, but an antiquated back end. Then there's things you can do. I've done the screen scrape thing with green screens. It's embarrassing, but sometimes it works. Whatever it takes to get there, that's great. What I've seen, and I think my folks, maybe most of you in the room can attest to this, though, is in an ecosystem, the whole lipstick on a pig metaphor works really well. If you have a beautiful and elegant visual design, but you still have a process that ends up dropping something in a mailbox, or worse, for a customer service rep or an underwriter or anything else, it doesn't matter. It doesn't matter how beautiful something is, because the experience is what's impacted. So, same thing on the back end. It's great if you've got back end processes and systems that, can do straight through underwriting and straight through processing. But if your front end is so difficult to navigate that folks can't get there, it doesn't matter. So to us, and the way that we're approaching that in terms of, we rebuilt our portal at the same time that we deployed our first lines of business on our new, core policy administration system. Peanut butter and jelly, or whatever you want to call it, those two things were part of the same, because at the end of the day, and this is the one thing that I say to any of my folks that join the team, especially with technological backgrounds, is nobody cares about your technology, right? It's all about what the outcomes are. However you get there, right, you get there. So the fact that it's a different front end and a back end for us, our customers don't care, and they should never have to care. They shouldn't have to know where those pieces end, the same way that silos with people or processes. The technology should do the same thing. We should get them what they need, and that's going to be fast and easy and intuitive. And you can't do, at least from my experience, the front end or the back end. You have to do both.
Yeah, I think you prioritize your capabilities based on which are going to reduce the most pain the fastest and cheapest. And it doesn't matter if it's the back end or the front end. Just use those dimensions.
Okay, so you talked a little bit about your experience. So you deal with both in North America and South America in terms of insurance companies. So is
and
there
software vendors, yeah.
And software. Okay, so what are you finding in terms of like working with your insurance companies and the vendors? What are some of the major things that that you're seeing? Are you seeing wholesale changes in terms of thought processes about dealing with these issues?
Oh, that's such a great question. Let me tell you a story. About 2 years ago, I went into a mid-sized insurance company. I'm not going to name or give any kind of information, give you any clue about who this company was. And they had asked me to come in and talk about trends in the business and what was going on. It was an educational kind of a day. And so I'm going through the trends, and I get to the bit about analytics. And the CEO says, oh, Carlin, move on from there. I think that's balderdash. And I said, oh, really? He said, yeah, I expect my underwriters to be experts. I expect my claims adjusters to be experts. I don't want the machine doing it. Let's move on. Okay, this is 2 years ago, right? Lucky all of you who were competing with them. Well, they go to another big InsurTech conference, and they walk in the room, and this was like deer in the headlights. And I run into them, Carlin, we got to have breakfast. And the CEO says, I had no idea that there was this much change. I had no idea that it had progressed this rapidly, this far. We need a strategy. We need a plan. And so this is part of what's happening on the carrier side. Some of the carriers are very, very ahead. I mean, they've got teams of people that are looking at this, investing in this. A lot of them have their venture funds or accelerators. They're on top of it. But if you look at the distribution of insurance companies in the United States anyway, it's kind of like this, right? I can't make that bottom big enough. My fingers don't do that. But there's, just a couple of folks. There's like 20 carriers over $5 billion in the property casualty world, and something like 800 that are below 100 million, right? And so you have very different levels. Those who are up at the top, they're on top of it. They are definitely doing very cool, interesting things. And those who are in the middle are kind of like, holy cow, what am I going to do? And so they're now starting to focus on their own digital strategies. We've seen a tremendous amount of core system replacement over the last 10 years. And that has created a
core system in what area?
Policy admin, billing, claims. A lot of that is done or close to being done. And so carriers have been able to, using these new configurable environments, move much more rapidly and do more with the same people, so they suddenly have capacity. And so we're seeing insurance companies saying, wow, we're suddenly realizing technology is actually kind of strategic. It's not just keeping lights on, it's actually about, it's like maybe as important as underwriting, I don't know. And the CEOs, though, are saying, well, I came up the underwriting ranks. I don't even know what questions to ask. I don't even know how to evaluate this. And so there's a lot on the insurance carrier side. There's a lot of people who are struggling to learn this, investing in this, putting these plans in place, trying to move very, very rapidly because the world has changed so quickly in so many ways.
So what about boards of directors? Have you had any experience in dealing with them as it relates to this?
Well, and the board of directors are similar in that, this is a part-time job for them, so they're not. Am I still on? Yeah. It's a part-time job for them, so they're not always, I'm sorry, I feel like I'm not, okay. They're not always as well informed as well, and so a lot of the work that I do with the boards is, again, helping to educate them about what the changes are and what it means. And the thing that insurance companies have to watch out for is to not be blinded by the light, which is a great song, but it's also all these shiny objects, right? And this happens to insurance companies where a senior exec will read about some cool new thing and then come to the CIO and say, why haven't you implemented blockchain yet, right? Or whatever it is. And so some of the work that has to be done is educating people on how to think through the shiny objects and not be blinded and do the things that will carry their strategy forward.
That's really a great point, and I have to be cautious of how I bring this up. So how do carriers determine, I don't want to say the winners and losers, but how do carriers determine the right choices to make in terms of product A versus product B versus product C? You might have a great salesperson, you might have a great implementation team, you might have the best product over here. How do I mean, I don't know if there's any answer, but
I have a data set of 1, so I'm not sure if that's going to be really valuable. You both may have some better perspective. I'll share mine. But
I think it's really important to think about. Go ahead.
Well, no, I mean, from my perspective, I don't really care much for the sales pitch in most cases. It really is, in the blockchain example, that is an extraordinarily shiny object. But to me, I mean, I have a bit of an advantage of being a little bit slow compared to most of the folks that I work with. So my questions are very much, what problem are we solving, right? And at the end of the day, anybody, and this is far outside insurance or any domain, right? If we're talking about a customer, and I think you were very eloquent in your presentation, but it's all about who is your customer, and if you can't get laser focused on that, and then once you understand that, what the problem is that you're solving, the rest of it's noise. Blockchain, I'm sure there are great things, and it's theoretically interesting to me, but right now we have real opportunities to do a better job, you know, whether it's our small business for the BOP work that we're doing, how can we make that easier for the quoting and the buy process and the binding and issuance, right? Maybe that's not sexy and exciting, but revenue and profitability is really sexy and exciting to me, so we start with those problems. And so anybody who gets in front of us with a solution, it's really what problem are you solving and how does it move the needle in quantifiable ways? And that's, I mean, but I would apply that to any offer that comes my way is start with the problem and then we'll talk about the technology, but if you start with the how, don't care.
Yeah. Yep. And understanding your business is really probably the most important thing they can actually do right off the bat, I believe.
I would say that there are two things to really focus on. The first one is if you're going to go after shiny objects. Is this on? If you're going to go after shiny objects, make sure that they are aligned with your strategy. If your strategy is low cost, go for shiny objects that are going to cut your cost. If your strategy is high touch, go for shiny objects that will help you touch the customer better. If your strategy is product and underwriting and capacity, then go for things like data that will help you make better underwriting decisions. So first figure out your strategy, then identify the products that will help you deliver on that strategy. And when it comes to picking among them, I think you have to have a very objective process. Salespeople are professionals at selling, right? They are very good at not telling you what they can't do. Very good at this. And so you need a very objective process where you lay out specifically your requirements and you have them tell you how they handle those requirements. You do demos of competing carriers or competing products and you give them a script. So everybody has to show the same thing. And if they can't, they're not glossing over it. So I think a lot of folks, the way that they buy is they go to a conference, they see a demo at the booth, and then they say, oh, that's really cool, let's buy it. And that's not the best way of doing it.
Great. That's a great points.
Yeah, and I would say, I mean, you're all here for a reason. And one of the things you can do in the way of really solid diligence is make sure that there's been a vetting of these startups and these new technologies and improvements that you can be applied to the business. So, you know, bravo to you for doing this because there's a lot of vaporware out there. So buyer beware. The other thing is I would say make sure that you've got the underpinning from the startup or the new project that you want to undertake with regulatory concerns. Like you said, not the sexy stuff, but the things that need to be taken care of really quickly. And then the third thing I would say is make sure that your data is protected because you have exposures there. So I would put that rigor around your lens.
Any questions? Straight in the back.
Just one. Is it on? Just one quick one. Going back to what you guys were talking about, the chief customer officer. So I think for a lot of startups, it might seem like that's the place to go. Or starting point. I know I've had experience myself. So, you know, for these positions that are being created, just out of curiosity, maybe for sharing, who do you typically see these people reporting to within the organization? Where does their budget typically come from, if they even have one? And what sort of decision-making power, stroke P&L, do they hold to actually make decisions on which vendors they should be selecting for the company?
Go ahead.
Well, most are figureheads, you know, and somebody said earlier it's, you know, you talk the talk, and so just because you've checked the box and said we're focusing on the customer experience, all of a sudden it's so. So many times, you know, these roles don't have a budget, and they're charged with the dubious distinction of trying to, you know, create some alignment within that herd of peers that they have. So they've got a full-time job doing that. In the best scenario, the chief customer officer reports directly to the CEO. I mean, I think that's really important to get a seat at the table, to have regular reporting around the metrics and the difference that you're making, and then, you know, being politically savvy to serve up some quick wins to your peer group to get even more alignment around what it is you're trying to do and change the world. But, you know, I will tell you, some of the people who are best as inflection points are chief services officers or chief operating officers or those people who are running call center operations, because they're stuck in the middle. You know, they get the finger pointed at them whenever NPS scores drop or customer loyalty isn't where it needs to be. And then this chief financial officer is also pointing at them going, oh, and you got to reduce your budget by 30%. If you can solve problems for those people, you're in.
Yeah, and just to follow up on that, for those of you that are selling into insurance companies, the business makes a decision. So go to sell to the business. Go sell to the chief underwriting officer, the chief claims officer, the chief operating officer, the services person. The CIO typically has veto power, and they will exercise that where necessary, but prefer not to. But the business is the one that makes the decision. So as you put together your own marketing, as you put together your own plans for how to engage with insurance companies, you have to be very crisp about how you will improve the business.
Yeah. And I'll close on that. So even if I'm empowered to make those decisions, and I often am, I am in lockstep with our COO and generally the president of the company all of the time. We don't, by design, I do not allow myself nor my team to make business decisions. They're business decisions. We make sure that the technology is appropriate, that it will address the needs that it needs to, and we deal with all of those details. But it's all about the business decisions behind it. You're absolutely correct.
Terrific. Well, I thank you all very much. It was a great panel, and thanks for your time. And so please thank everybody in the panel.
Hey, great meeting you. So nice to have met you, Donna.
Appreciate it. Thank you. Thanks.
Our final presentation for the afternoon is by the Communications and Media Chair at Silicon Valley Association of Health Underwriters, also known as SAVAHU. Please welcome Michael Luhan.
I got some woos. Is it because I'm a broker? I'm really honored, one, to speak on behalf of employee benefits as a market segment, but in hopefully a more nuanced perspective that most of you don't hear about, which is from a real-life broker. Proud to have served, although I got into the business accidentally, like most people in insurance. Get into the business accidentally, but have had a very proud career that almost spans 30 years. So this is a really exciting time to see so much innovation, so much disruption, and a really fortunate place to be in this geography, which in many ways is the epicenter of most of that change. So the perspective that I'm speaking from today is largely around health insurance and employee benefits, although we have a global audience. We also have some common themes that I'm hearing that cross all sorts of business lines and are global issues. But I'll try to add a more specific nuance that I think is very specific, especially interesting to the insurers, brokers, and those that serve in the health and employee benefit space, especially, and domestically also. A market segment that is about 1/6 of our economy. So with that, I'll start with this not so provocative statement. I think we've heard it 100 times already, that brokers aren't going anywhere. 5 years ago, that wasn't necessarily the opinion. In fact, there were some very large bets being made. There were some very big expectations that said that brokers would be going the way of the travel agent, particularly in our segment with the passage of the Affordable Care Act, Obamacare, creations of exchanges. I was one of the founders at Covered California, the state-based exchange here in California. I'm proud to have been responsible and built the agent distribution channel that ultimately is responsible for enrolling about half, 47% of California's enrollment was done by licensed agents. They weren't expecting it, but they did. So I think by now, fast forward, because we're in open enrollment right now, I think we're seeing a fairly consistent, somewhere between 40 and 50%, state by state, or even the federal exchange. Most of that enrollment is being done by the licensed insurance agent channel. So much like this somewhat famous Mark Twain quote, we ain't going anywhere, and rumors of our demise are grossly exaggerated. So when we talk about agents and brokers, and I do use those terms interchangeably, but for the convenience of my presentation, I put them in 3 buckets, 3 categories, if you will. There's certainly a whole bunch of different ways that you can categorize them, but for my purposes, I talk about the first bucket, which is the traditional broker. Brokers that are typically brick and mortar, have been around for decades, been around for years, very traditional, usually specialize in one line of business. They're typically employer-based, individual, some are both, but mostly not. And as an example, I show farmers, but there's many examples of those that are not just independent agents, but very large, even Fortune 500 companies that represent that category. They are the largest segment, but they're also shrinking, and I'll talk about that in a minute. There's online disruptors, and I use Zenefit's name, fully conscious, fully aware of the fact that they are no longer in the broker business. I had the privilege on this stage of interviewing all 3 CEOs, not at the same time, but Parker Conrad on this stage with Savahu introduced a very disruptive model that was going to drink our milkshakes and put traditional brokers out of business. Fast forward another year, we had David Sachs, same stage, on this very stool, who apologized for that very brash and very provocative entry into a market that wasn't going to just let that happen, and also even admitted that we sort of regret coming into the market that way. And even Parker Conrad explained that he was at InsurTech or TechCrunch Disrupt in New York. He was raising money. He had 3 guys and some T-shirts and was trying to be deliberately provocative to raise money and swinging elbows in the process. But fast forward, just last month had Jay Fulcher, the current CEO of Zenefits, on this stage, who is now, already old news now, but announced that they're no longer in the broker business. Instead, they're providing the technology for a select community of agents that will partner with them. And he recognized the difficulty, the complexity, the nature of relationship, and how it made better sense for his business to get into the business of enabling agents with technology instead of trying to displace and disrupt them. And then, of course, the third category, the new breed of tech-enabled brokers. Some are new, some are traditional, brick and mortar, some are online and whatever, and I use Decisely as one example, but there's many. Okay. I'm not going to have a water moment like the president had yesterday. I guess you didn't see it. There's a perfect storm, and again, there's elements of this has already been shared, but you had the Affordable Care Act, Obamacare, that happened, and while we're still waiting to see whether or not that's going to be changed, if it's going to be fixed, replaced, repealed, single payer, something else, the ACA plus a changing workforce, and I'm not going to focus too much on millennials, but I will say that probably too much made about serving the demands of millennials when there are perennials like myself and many of you who are boomers, who are Gen X, who have a lot of the same purchasing habits, a lot of the same market demands, have a lot of the same expectations. So it is millennials and the rest of us who call ourselves perennials. And then, of course, the ubiquity of InsurTech. I don't have to tell you about that in this room, but in a market that is very nascent, very early stage, we're just trying to get rid of fax machines in health insurance. I mean, that's how early we are. So when we talk about blockchain and other stuff like that, we're still on the very first step. Again, a common theme we hear in this room today. This hurts me. This hurts my heart to say. Obviously, insurance is universally unpopular, but when you talk about health insurance and employee benefits, it rings especially true, especially now as insurance premiums continue to rise, and so much so that in the US, many Americans, about a quarter of them, believe that not only is it okay, but it's a righteous act to stick it to the man, to defraud an insurance company, to do whatever it takes to bend underwriting or whatever to your favor or advantage. And on the other side, a whole lot of money being wasted, a whole lot of money being spent trying to detect and mitigate fraud, and of course the impact of fraud itself, and a great opportunity in there with technology to automate, to take the guesswork or the fudge work out of an underwriting process to help us more accurately price risk and better manage it, improve claims, and so on. And on the bottom right, I'll just point this out as just a side note. There's so much talk about peer-to-peer, sharing community. Just a reminder that our insurance industry, the modern insurance industry we know today, was actually born out of that same genesis. It was actually Lloyd's of London, 1686. Companies were underwriting out of coffee shops and saying, if a ship goes out with cargo and might not come back, some of us can form a community and help protect and share the interest of that risk. So when we talk about peer-to-peer and sharing communities, we've gone full circle and now we're doing it again, but we're calling it new. So look that up if you like. There's probably a lot more detail to that I'm skipping. So at the risk of stating the obvious again, some of this has already been said, but very specific to the employee benefits and health insurance broker community, there's not a lot of mobile. So think about just even 2 years ago, what was available in the space for health insurance agents. I'm talking about the tools that they use. Not a whole lot 2 years ago, not a lot even still today. So when you're creating tools and technology and solutions that are going to be used for agents, just know that you're really coming from a very early stage. They don't have a whole lot in their quiver, a lot of arrows in their quiver with regard to mobile, hence the desktop image. I don't want to speak for Jason, my partner at Limelight Health, but we learned in a very hard way the very first year that we formed Limelight, created a mobile-only strategy to a marketplace that's 100% desktop. So we pivoted. Restoring lost revenues, and this is something that's not talked about very often, but there are a whole bunch of brokers who are trying to figure this out, and especially in the individual marketplace, how to become more efficient, how to make investments in technology. All the while, insurance commissions have been reduced gradually or immediately to about 90% less. And it's a considerable reduction in insurance commissions in a space that also has higher demand. You've got an insurance mandate, you still have the ACA as the law of the land, but you've got a bunch of insurance agents that are trying to figure out how to continue to serve this market segment with only 10% of what they used to make a decade ago. So again, and also having made significant investments in technology too. So when you talk to those same agents about solutions, if you think that they were frugal and very ROI, value focused and oriented before, especially if you're talking to agents in this space, in the individual market segment, even more so today. And then, of course, there's a lot of market noise. I love events like this. It's very digestible. But there's other events. You go to InsurTech Connect in Las Vegas, I think just last month, where you had 3,500 people converging on Las Vegas to meet with 100-plus vendors. And imagine that flight back home. You're at the airport. You got your giveaway bag full of brochures and business cards, and you're overwhelmed. Which one do I start with? What's the priority? There's 6 companies that did something that's called transparency. Which one do I go with? Who do I even meet with? How do I even engage? What do I ask them when I meet with them? So, and also they're already dealing with and learning some of the new players that have come to market that are bringing some innovation. Great companies like Oscar Health, Canopy, Collective Health. Telemedicine opportunity is barely scratching the surface. Makes no sense to me. I'm a big fan of it. I'm a recent convert and have used it and don't understand why more people don't. And I think it's just a mystery to many of them. So you also have, again, I'm mentioning Zenefits, but there's also at least 100 benefits platforms. Some of them do Ben Admin, some do HR, payroll, ACA, compliance, CRM, a whole host of services. Some of them are old, some of them are new, some of them rebranded. And it's, frankly, it's really dizzying trying to track and keep tabs on all of these different players. And then, of course, they're looking at the market just as we are to see who's merging, what partnerships are being forged. Is Aetna and CVS a good thing? Is Anthem's creation of a new PBM after their breakup with Express Scripts, is that a good thing? And of course, what happens if Amazon gets into PBM, into pharmacy, which I believe they're piloting in Asia, and it seems inevitable, if they're going to be in PBM, why wouldn't they be in insurance? Optum is owned by United Healthcare, and every major insurer also owns a PBM. Why wouldn't they? So, and is that a good thing? Some of this I've already said, but again, I'll just focus on, they're looking for ways to differentiate. So service as a service, if that's a thing. Insurance is highly commoditized. Premium's the premium, the rates are the rates. And in some market segments, by regulation, in the individual marketplace in California, there's some regulations that vary from state to state, but all plans are the same. The only thing that differs is the price and the provider network. And the way to differentiate in a very commoditized market is, well, what's your service experience? What tools do you provide? So brokers are looking for ways to differentiate that way. Also, deductibles have never been higher. It's a really scary time to have deductibles extremely high while customers' health and insurance literacy is at an all-time low. So you have more and more people, especially millennials, who have a huge gap in understanding how their insurance works or even how healthcare works. And deductibles are higher and higher, and they're looking for solutions that many of you provide that have suggestions both in product and in decision tools to help close that gap. And again, all the while trying to watch for companies that are either competing against them or enabling them with technology that they can own or rent. And this has been shared before, but I'll point to it again. Many are retiring, so a lot of agencies don't have replacement or succession plans, and so there's more and more consolidation happening, especially in the broker area. Some of this has been said, so I've got the smartwatch icon on the left that basically reminds us that carriers are trying to figure out how to get connected, Internet of Things, and big data, and all that great stuff. And they're also, on the right, looking at a whole host of issues, examining the value chain. And I appreciated Carlin, great, and Donna too, I think, also touched on some of this. Who's the customer? Is my customer the broker? Is my customer, the client, the policyholder? And I think, and I have a different bend on that question, is what would the customer say? I don't want to be owned by either of you. What I want you to own are the responsibilities. I want you to take claims, pricing, product, marketing, network management, whatever. And for some carriers, maybe the answer is, and if you can do sales efficiently, great. If you have a good captive system, great. But there's a good argument in defense of having a variable cost model, broker distribution channel, where you only have to pay them when they produce. And many carriers are making that decision and saying, yeah, that makes sense. We realize they're not going anywhere, and we're spending 2 to 1 by having our own captive distribution channel. We're not very good at it either. So let's focus on being a carrier, and let's let them effectively outsource sales. And again, I'm reminded by this quote. I think a lot more understanding around insurance actually needs to be sold. It's not bought. And I think most of us in this room get that. Last, before we get into our panel, again, consolidation continues. There's a robust national and state level conversation around single payer. While I can speculate and lay my own personal bet that it's unlikely to happen at a state level, who knows? I've lost other big bets recently, or what I thought might or might not happen politically. So the recommendation, the advice obviously is, as you're creating solutions and tools, be mindful of health policy that changes very rapidly. This week, if not today, I believe it's a Senate or a House vote happening on the tax bill, which may or may not include an individual mandate. And what that means to the marketplace. Rates predicted to go up 10%, and maybe 13 million people be without coverage. How does that impact the business that you're in today? And a last reminder that we're in a highly regulated industry. We know that. And I'll point to Zenefits as one example, where they famously got into trouble with licensing, rebating, and a whole host of other issues that the regulators at a state level both fined and penalized them for, that they're still paying for today. I don't mean to beat up on them, because I think their CEO today, at least the last two, would admit the same and have. And just a caution to anyone getting into this space, just make sure you mind the gap, mind the rules. So with that, I'll turn it over, and I think we're ready for our panel, right? Thank you very much. Oh. This last image, this is what mobile health insurance used to look like back in the day. Thank you.
Stand up here.
Oh, that's right. And he's back.
Our final panel for this, for Broker Age, welcome Tom Brophy, CEO at Brophy Associates, Saeed Azimi, founder and CEO at DinoSense, and Jason Andrew, founder and CEO at Limelight Health. And welcome back, Dick Cagney of KBW.
Thank you. Okay, so we have a new panel, and we're going to be focusing on reducing risk factors and increasing customer engagement. Sounds like we've been talking about that all day long, in some respects. So it's a little bit of a different panel. Said, you are, you've got a company, you've created a device, basically, DinoSense. It's a patented device. And you do some pretty interesting things with your product and services, and it's different than the other three people up here. I'd like to have you spend a minute, if you would, to talk about why you did this.
Sure. I mean, thank you for asking that question. In fact, we are obviously we're focused on health assessment and health management side of things. I know this panel, this event is mostly related to insurance itself, right, of different kind, right, not non-health typically. So we're focused on that. I mean, I had my own personal experience. I've come from a family of doctors and physicians. So growing up, it was be a doctor, be a physician, right? And then I ended up going into engineering, right? But then ended up having my own personal experience with the health, and I thought that there was a better way to do health management, health assessment, right, in a way that would change the paradigm, right? And so that's how the company came about, and we, obviously we've been trying to solve that problem, and it's a tough problem. And there's some actually impacts of what we're trying to accomplish relative to other side of the insurance business, which I hope, you know, we'll talk about it today as well.
Okay, great. Okay, so let's talk. I'm going to talk about your business. The two of you on the opposite ends about Limelight. I mean, you formed it to help better data integrity and sales efficiency for for carriers. So, I mean, what is it about this? Why did you do that? And let's talk about what's happened, and you could talk about both your experiences prior to, and then Tom will get you. I've got a couple questions for you as well.
Hindsight's 20/20 is what they say, so probably because I'm a glutton for punishment, I think, is kind of the answer to that. No, in all sincerity, so I've been actually in Silicon Valley for almost 20 years, and during that entire time, I have sold employee benefits in the group space, and very passionate about the industry and very frustrated with the level of just how difficult it is to operate. If you think about trying to get a quote from a carrier, help a customer who's a business owner understand their options, and ultimately spent days and hours at time, whether with our staff or as a broker selling insurance products, picking up the phone when somebody is at the doctor and that employee doesn't understand what they have, their coverage wasn't in place, they didn't get their ID card, their child is sick and they thought they had a $1,000 deductible and they have a $10,000 deductible. And just getting access to the information and being able to navigate through it, our industry is operating as though it's 1982. I mean, it's still, even in California today, again, we're supposed to be the most advanced, state probably on the planet, supposedly, but 90% plus of all the small group enrollments go through paper. So Kaiser's 99%. So whether it's faxed or emailed or mailed literally in, that is how, if you buy insurance from an employer in California that is under 100 employees, almost 95, or between 90 and 99% all go through paper.
Are there any regulations about this at all? Is this just all the way it is?
Michael, that might
It's just the way it is.
Right? So was that why you decided to join and co-found this company? I mean, you were very successful in working with the exchange and bringing 47% enrollment. So how does this? That's incredible to think about those numbers, what it really must mean. I mean, if I'm an employer in the state of California, that's horrible. Right?
It is, and it just magnifies both the opportunity and the current state where we're dealing with. And right now, and I'm looking at you also as consumers, many of you are probably, because we're in the middle of the fourth quarter, think about your own open enrollment experience. That is, if you're in that moment right now as a consumer. Most of you are still getting the brick. And if you're not getting the brick, maybe your spouse or partner is doing it for you, whatever, but someone's getting the brick of paper. The brochures, maybe a provider network, a couple of applications, maybe a spreadsheet or two. If you're lucky, you're getting an online experience that might be in V2, where it's better than it was last year, but there was no, it was pretty rough still. But yeah, I mean, that is the experience that we're going through. And if you're with a larger employer, you've had a maybe more delightful or better experience for a couple of years. But to Jason's point, the small group market is still very much paper-based.
So now I think I'm starting to understand why you've decided to get into this business, right? I mean, Tom, you've been doing this for a long time and trying to simplify the process and making things more efficient. Okay, all right, we'll share. Go ahead.
So, I mean, just to kind of play on these guys' experience and in the small group market, I'll just share a story. I have a son that lives in Virginia, and I'm trying to help him get insurance on the exchange. And I know a lot about this. I've been in the industry for 35 years. I'm 6 hours in to this discussion now, and I've been waiting for paper. And I had to go down to UPS yesterday and fax something to them. And I finally got them to admit this morning or they finally acknowledged to me that they have everything. And now it's another 10 days to get accepted.
I must have.
That's normal. I mean, that's very common if you even had a little audience talk. I mean, it's.
Wait, okay, hold on. Increasing customer engagement. Right. Good luck.
Well, one of the statistics I've even looking at recently, we've talked about is if we look at the employee benefit space, it's estimated about 30 manual processes account for 40% of the cost of all insurers' business. So think about that for a second. And if we could deal with each of those processes, and so take just this, like, can I get to a customer service rep and not have to wait 10 days to get an answer? Like a manual breakdown there. On the group side, uploading a census. We talk to carriers that have service centers around the country that are filled with about 500 to 1,000 customer service reps that do nothing but intake and ingest censuses to get it to the underwriters. So that process alone is a business. So it's estimated if you could take and automate those 30 processes that are all manual, and each one of those could be attacked if you think about claims administration, enrollment, census upload, that you could reduce cost by 25 to 40%. So there's massive implications in terms of just, so often we talk about, AI and blockchain, all these things, and I'm trying to figure out how do we actually just get a census field uploaded simply into a carrier and have that sync across payroll, enrollment, and my CRM, which can't be done today. So that's kind of where we're starting from my perspective. And your experience is common.
So this is like at the end of the food chain, it sounds like to me, right? I mean, you have the personal lines carriers, you're seeing a lot of advancements there, you see the distribution side, but then this is incredible to me. I mean, to be candid with you, I'm lucky enough in my experience of work that I had to deal with these kinds of things, but this has got to be incredibly frustrating for the customer, and you're trying to, how do you get the customer's trust when you face all this stuff? I mean, good luck. And then what about the Amazons and the others of the world? Are they potential entrants into this space? Is this possible?
I think for certain they're going to try, but I think you had a really good point, and that is they're going to face, they don't quite understand how much regulation is involved in this industry and how difficult it is to break through some of those regulations that are going to be obstacles, right, in many ways. But I have no doubt that they're going to try to, through other ways, or maybe acquisition and things like that, to really get into this business, because this is an area that I think is the last big business where you could, for companies like that, where they're looking for, how do I get to $100 billion more dollars? How do I get to another $200 billion? And that's going to have to be this kind of industry.
I'll add just a quick comment to that. Having worked for Express Scripts, the largest PBM in the country, and their home delivery pharmacy, at least at the time, in St. Louis is very automated and looks and operates a lot like the Amazon warehouse with all of the automation and efficiencies. And think about it with consumers. Amazon's delivering inside your front door. Whereas insurance, we have still a little bit of standoffishness with benefits and insurance companies, whereas Amazon, we're letting them in our house.
Do you think Amazon, do you think Amazon
close the door behind you?
I'll give you the look.
Do you think
Right.
they bought
Genki,
Whole
right?
Foods just for foods, or do you think they bought it for distribution centers? But so I'm not sure how to ask this question. This might not make sense, but so how does this all tie in with what this gentleman's, what the product he's providing and service that he's potentially providing? And if you, as a client or company, wants to get access to that, I mean, what's that paperwork process has got to be a nightmare, I would imagine.
Yeah, I mean, certainly for us, since we're focusing on post-hospital discharge, you know, we're still trying to manage how do you get somebody out of the hospital and keep him healthy, right, and not have him come back, right? So obviously I'm trying to solve a slightly different problem, right? But it all ties in if you're trying to, you know, we have discussion with different insurance companies about how our services can allow them to better be in tune with what their population is doing, right? Because they you know, obviously they have tons and tons of data when they go into the clinic, when they see the physician, when they see the doctors, right? There's a tons of data around that, and obviously if they're processing claims, they have a lot of data about that, you know, who gets paid for what and what services, right? But they lose connection once that individual isn't necessarily using the service, but they can't predict how they will be using that service, right? So that's, I think that's where we would be able to fill some of that information gap, because now we have a better understanding of the behavioral aspects as well as what the health aspects of the individual, and how well are they becoming empowered, how well are they making behavioral changes that are necessary to improve cost, right? At the end of the day, for insurance, it's all about, you know, how do I reduce that cost? And so at the same time, provide a better understanding, not only a better service, but an understanding of how my population of consumers are doing.
My quick comment to that would be, if we can drive the transactional business out of selling insurance and all of the stuff that's involved, brokers can migrate less from sellers of insurance to advisors and consultants around health, wellness, and so on, and focus more on his products.
Yeah, I mean, some people are, I'm just sorry to cut in, but some people are even starting to think that an insurance broker could become what a financial manager does, right?
Wellness,
what do they do?
Wealth advisors.
Wealth advisors. Some people call them, you know, wealth advisors, right? And that's where the brokers could possibly move into. Because now at that point, now they're going to say, you know, I'm going to have a different conversation with you, not just, you know, on an annual basis sell you a new insurance product, but I want to talk about you, right? Understanding you, your family, how your family is doing, right? I kind of sense that, you know, you might be not doing so well, right? Or there's certain things that I can help you out with, and that becomes a higher level types of service that they can provide.
Yeah. I mean, that's an interesting concept, and would be very, very changing to the industry. But the one thing I would have you think about with healthcare, I think it's a little bit different than maybe some of the other insurance industries, in that in most of the other industries, we're selling a financial promise. And in health insurance, you're still selling that financial promise. You're giving me money today, I'm going to pay for a risk or a liability in the future. But more than that, within healthcare today, we're challenged with the fact that we're also dealing with the dysfunctional healthcare system itself, and one that is built around transactions and individual procedures. Okay, if you look at the fundamental way healthcare is paid for today, it's paid for on a procedure by procedure by procedure basis. So what do we get? Procedures. Okay, we don't get a lot of coordination across. And one of the
incentive, right?
Right, and one of the fundamental things that has to happen, and really hasn't happened with the ACA, you know, they've started it by allowing what they call ACOs, or accountable care organizations, which is allowing provider groups and hospitals and you know, different people along the stream to be able to share risks together, which was in many ways not allowed prior to the ACA because of Medicare fraud rules. But what needs to start to shift here is the ability to manage across that continuum, and to actually start to manage for health and not manage for sick. And that's really, in the end, what you're trying to do in the type of system, is that coordination across. And that's a, you know, it's a big challenge. It's going to require a lot of visibility across the system and data exchange that really doesn't exist today. Today it's done by many, many people with spreadsheets and manual data. And that's the fundamental problem that is, you know, in my opinion, is one of the fundamental problems plaguing kind of the ability for healthcare to leap forward.
Any questions at all, by chance? Come on, guys, you're gonna have to have one question out of this group. All right. Well, just think of one. All right. So going back, you were going to say something? I was just going to ask you a question anyway. Go ahead.
Go ahead.
No, please.
Okay, so
I'll come back.
just to add what you were saying, I think not only is it that issue, but we go back to maybe Amazon or others getting into insurance. I mean, again, employee benefits. And Michael, correct me if I'm wrong on this stat, but I mean, in the U.S., less than 5 to 7%, I think, of us get our insurance as an individual. So the market that's talked about the most might be about 10%. But the market that's talked about the most in the news is the individual market. Then you've got Medicare. It's a whole other market in the way it does. And the rest of us get it through an employer. So you've got a number of large employers that are offering it, and then 96% of all the businesses in the country are less than 50 employees. So you're talking about now a market where you've got all, like the consumer is getting their benefits or their insurance through an employer. It's not a B2C. It's really, you're talking B2B. And so there's a lot of challenges there as well in terms of how do we not only innovate, but how does someone like that, unless who's paying for healthcare or the whole system changes, how do you actually solve that when really you're talking about B2B transaction? And there's all kinds of problems and challenges with getting to the actual end user or the customer when you have to go through an employer.
So tell me about the response that you've had from the insurance companies and the companies that you've been dealing with since you started this.
So our form of disruption, we're making slow and incremental progress. We think we're making a dent in it, but you know, you take a lot of startups that are trying to innovate, and if you take any other industry like banking, where somebody can build on a set of standards and create PayPal or Stripe, or you take another industry where that happens. In this industry as a startup, you literally have to connect to every single carrier, and it's a different connection in each transaction. So part of whether you take a Zenefits or somebody else, part of, I mean, I don't know everything they're doing there, but I would assume part of why they finally realized that we aren't going to be in the brokerage business is they had to connect to every single carrier and had a plethora of business coming through, and that is very difficult to scale. So we're making small incremental progress.
Yeah, I'll just chime in real quick. Tom and I used to work together at Blue Shield once upon a time, so we chatted a little bit before around what it takes to move an entire industry in a direction. And it's an area that, you know, we're uncomfortable with, but I think the reality is there are some things that require legislation. Someone in a regulatory level has to say, you will all play by these rules. Until then, everyone has their own disparate policies and ways of going about things. And it does stand as the reason we don't have price transparency in healthcare. It's the reason why you cannot, and you can ballpark, but you cannot find out easily, I should say, what a knee replacement will cost, and shouldn't be surprised to find out that there's probably a 10x swing in the same zip code. I'm not talking city to city, I mean in the same zip code, you can find a 10x variable between this facility and that, and it has no correlation to quality. So my point to all of this is as we're trying to crack this nut and deliver better experience and consumerism and more informed and transparency and all of that, it doesn't exist until or unless, I think, in that regard, legislation happens. I think something has to happen that says you will do this. And we've already seen attempts at this in pharmacy and in some other areas nipping at the edges, but that's what stands between us and having real consumerism and transparency.
Well, I would agree. I mean, we talked about this earlier, and it can come in the form of regulation. It also can come in the form of you know, who's paying the check. You know, the federal government right now pays, between the ACA, Medicare, and Medicaid, pays north of 50%. You know, if they start to move into the commercial market, employer group market, and change that, then game over. You know, that they're gonna, you know, the rules are gonna change in a big way. But it, you know, there's no single point of a push right now beyond the government that really has any big clout, in my opinion.
I was just echo what both said from the standpoint. I was in Connecticut yesterday on another panel, and their governor was there and the insurance commissioner, and they actually were forward thinking about trying to figure out how they could, get some standards. LIMRA has been working on that. Accord, which has done some standards at least on the property casualty side. I think people have been working on it. There's been a lot of discussions this year, but I agree with what Michael has said in terms of there's got to be some kind of systematic change, which will allow then a ton of really innovative companies that are doing some very cool stuff to actually focus on what's really important, which is the user experience, customer engagement, and the things that matter. Whereas right now you have to spend a ton of time just dealing with all these different standards. And I do think that conversation is taking place more, but we really need folks that are interested in that to actually have those conversations to figure out how to drive it forward. And again, I think it ultimately comes back to we get very frustrated about healthcare and about employee benefits, and but that's really a big part of the problem that has to be addressed when we talk about costs.
Are we going to be sitting here in 5 years having the same conversation?
Probably.
Yeah, I think so too.
It's kind of sad, right?
I think the problem is also that we're not really one country as it comes to health insurance. We're really 50 different countries, so it's very, very difficult to.
Absolutely. So let's kind of move along. Millennials and Gen X, differently, how are they engaging differently or engaging similarly in the group side, or is it just what are your thoughts?
I've already shared mine. Perennial.
Well, here's my point of view, and I have three millennials as three sons on the East Coast, and I actually called them to ask them this question to try to understand. And my take, after listening to them and just kind of looking at, or thinking about the question is, I'm not sure that they're significantly different. I think the environment is different. Health insurance is a heck of a lot more complicated today than it was 15 years ago. The amount of cost sharing at the member level is significant. The complexity of the networks is significantly different, and I think they're confused, but I think they're not the only ones that are confused. I think the whole, perennial. I love that. I love the label there, because I think everybody in the audience struggles in some way trying to figure out. I think the big difference with the millennials is that they're more they're less willing to kind of wait and to voice their frustration. And I think that as they start to access healthcare more and more, I think they're going to be a loud voice.
So what is that going to change, though? I mean,
what is that going to change?
Right, because you think about in banks, ATMs, you get access to cash, you get access to whatever you want. Now in personal lines, you can buy an auto insurance policy. Everybody wants to get access to information. They can, but how is that going to change in this environment with the regulatory side the way it is?
Well, less about regulatory, but I'm actually sort of surprised, and it may have been LIMRA whose research showed a surprising behavior that millennials actually had a preference to get information online but have available person to person as it related specifically to employee benefits and health insurance. I was surprised by that. I don't know that I totally buy it. Intuition and some of your own experiences might say otherwise, but I think it might test or challenge some of the assumptions around this monolithic, homogeneous experience. They want this. I don't think it's true.
Is it possible that health insurance is a little bit more complicated than they might have thought?
I think that's part of it, yeah. And companies like NerdWallet and others are really attuned to being really good communicators, specifically in that space in healthcare, insurance, and finance, that do a really good job communicating to that audience.
I think selling to them is a lot different, right? Because they don't watch TVs anymore, they don't read newspapers. So you have to address that change in how they consume information, right? And how you have to approach them. And I think.
Go ahead. Finish up.
One wrong move on can be amplified a million times within their social, right? Versus you could do 1,000 things right, and that doesn't even get viewed 20 times, right? So, okay.
Question?
Yeah, I was wondering, after Michael's keynote speech, about the fact that the mandate is going to probably go away and that the premium is going to go up 10-30%. What are your thoughts about single-payer systems in the United States? I know it's a controversial topic, but want to know whether you think we're moving towards it, and what are the policies or changes that is going to move, nudge us toward that, or if that's just something, a pipe dream, sort of.
In 9 minutes, we're going to do that? Well, a serious answer. So the tax bill is suggesting to take out the individual mandate, but it hasn't been voted on or passed, at least while I've been sitting up here. So it's an attempt, and there's been many attempts, so let's table that one. To the single payer, yes, we will move toward it. Doesn't mean we'll get there. But more broadly, universal coverage, I think, is inevitably the goal. And be curious if anyone is from Germany or Switzerland or familiar with their systems. Those are probably systems that are universal coverage, that maintain a private healthcare system. I spoke, there was a 2-day assembly hearing here at the state capitol where they were listening to a number of different voices on the topic of universal coverage. And my point of participating in that was to say, yes, we spend nearly 18% of GDP on healthcare and get less for it. Yes, there's better ways and more efficient models. Everyone does it better than us. But also, there are other ways to do it that are closer to where we already are. And I point to Switzerland and Germany as two fine examples of that still use a blend of private and public. That's where I think we'll get to, but not quickly.
I have a slightly different take on that. But,
finally, some controversy.
What I would say is that I think I think the term single payer system means different things to different people. I think we're going to get at some point to Medicare for all. Is what that's what I think our single payer system will ultimately be, and I think it's going to take some time to get there. I think it's going to depend on what the Republicans are effectively going to be able to do. They've spent a lot of energy over the last year here taking away the things that have stabilized the Obamacare programs. They had their problems, but they were solvable, in my opinion. And what many of the things that they've done have taken away the stabilizing factors, which I think is going to accelerate the problem. And then depending on where they try to take the solution, and right now what they're trying to do is go backwards to where we were, pre. And I think as people experience that again, they don't understand. My opinion is I don't think most people know what they're talking about when they're listening. But I think when they experience it, especially given what they've had, I think there's going to be a backlash. And I think that backlash is what, if the Democrats are in place, and that's a big if. But if the Democrats are in place and there's enough of a backlash, then I think they'll move forward to Medicare for all. And what Medicare for all does, in my mind, is it basically takes away all the contracting that's going on right now. Because if you look at health insurance companies, we spend a lot of energy contracting and create a lot of complexity through that contracting. And if we can all move to everybody's paying the same rate with Medicare, and now what you're doing is you're talking about risk transfer from the government to an intermediary like an insurance company, or directly to a smaller risk unit, which is in a provider group like an ACO, like Canopy was mentioned earlier. And then what they're doing is they're competing on quality, and they're competing on service. And I think, my personal view is that's where I think we'll end up. I don't know whether it's 5 years away or 10 years away, but that's if I had to make a bet, that's where I think we're going to be.
Go ahead.
Yeah, that's interesting because, as you know, Medicare has two different ways providing care. One is Medicare Advantage, and the other one is supplements with a drug plan. So it sounds like what you just said is definitely, you know, someone advocating, if I could use that word, a Medicare Advantage, which, you know, a beneficiary would be, subscriber would be limited to a network. That, you know, would both systems survive, the supplement and drug plan and Medicare Advantage? Because I certainly like to see choices for the consumers. And, you know, with respect to Michael, you said we'll get there, but not soon enough. And what's
to universal coverage.
Okay, Tom says 5 to 10 years. Do you think less than 5, more than 10?
I think, who knows? It's really, it really depends, I think, on how much noise is created in the system in the short run here. I think that, to me, that's going to be the driver. Now, you know, in addition to this, I mean, one of the things that has to happen if we try to go to what I'm envisioning is we have to address the employer market, you know, and that, you know, that's going to affect a whole new, you know, tax discussion, and because somebody's going to ultimately have to pay for this. So it's complicated, and it's, you know, it takes a lot. And right now, the government is not, in my opinion, you know, I'm sure many of you share it. You know, they're not a well-functioning and cooperative group. So, and you know, what I'm speaking to really needs to create some kind of collaboration.
I'll say one quick thing just to add, tying back to what we were talking about, millennials. I think the millennial voice carries a lot less stigma or baggage around what is or isn't you know, a social mission, a goal, an outcome. What are we trying to do? Are we trying to have insurance if you want it at a lower rate than we pay today, but some people aren't covered? Or some process by which everyone gets covered and you're selecting a single tier, or there's different types of ways to achieve that. And I think that's the discussion we're not having. We're still fighting against get government out of my insurance, and meanwhile we have a VA system that is the most socialized healthcare system that's most closely to my friend Kim's here in Canada. It is a single payer system. So we're already in some parts of our fragmented insurance system already socialized. We just don't like saying the word.
Yeah, but I think we're also going to live longer and longer because the technology is getting so much better, right? So, and well,
with your technology.
Well, yeah, certainly, yeah. But you know, overall, the question is now if people are going to live much longer, right? And the mortality rate is going to change, right? How would that impact insurance? How is that going to insurance health? How is that going to, right? And even the cost, when you're talking about the cost, who's that going to, how is that going to be? You know, nobody knows the answer to those things, right?
Well, most of the conversation we've had up to this point is who's going to pay for it, and not what the underlying cost is. You know, another example of just kind of what's going on in the healthcare system, you know, I talked earlier about my son, you know, and I got him a quote for 2017. Well, that same company, that same product for January 18 is 33% higher. So it's $100 a month higher, $1,200 a year higher. So it's just, that's outrageous. And I understand intellectually why it happened and what's going on, and you know, the different subsidies that are going on and going away and all that. But in the end, it's not sustainable. And I'll give you a couple of statistics about healthcare that would, you know, where you know we have to get as a country and really have some conversation is really around. Is around the cost. And if you look at healthcare across the board, we spend 25% of our healthcare dollar every year on the last 6 months of life. Okay, that's a big number. And when it's your mom and your dad or your brother and your sister, it's very important to you. But when you step back and you think about it, you know, across the whole system, is that sustainable?
My kids have already said no to me.
Right. Well, we pay more for health care in the last 6 months of life than we do on primary care education in the United States each year. So it's, you know, there's some really hard questions that we have to ask and we have to get at, and that's why I say I don't know how long it's going to take, because there's a lot of facets to this, and it gets very, very political.
Great.
Yeah.
Thank you very much.
I'd like to make one more comment here. Sure. The fact that we've gotten into this kind of discussion really points out that technology is not going to solve this. That health industry is a lot more complicated than, say, P&C. And so whatever I believe or you believe or whatever, I can see right now, just from listening to this, that it doesn't matter how easy that application is to do online or how fast you're taking care of the customer. If we don't resolve the regulation, it isn't going to make much change for us as agents or for our children and our families who are using the insurance.
But I would still encourage you to work on the simplify of the system from an administrative perspective, because we need it.
All right.
But just again, and I think we as agents get extremely frustrated because we want to deliver the service and we want to help our clients, but technology can't help us on this right now. It's about that regulation.
Great. That's a very valid point. Thank you very much. Thanks, guys. It was terrific.
Thank you, Dave.
You're really doing a great job.
It's great. Thank you.
We have 10 minutes to stretch, move, get a brownie, get coffee. You don't want to miss our final 6 startups that are pitching at 4 o'clock. Leo, for example, is our first one up here from New York. We wanted Leo to pitch at our selection day in July, and they were too busy for us, and now they're here. So you don't want to miss that. Be back here at 4.